$38 billion. That's how much fraud and scams cost American businesses and consumers last year alone. And it's getting worse. Welcome to the Commercial Pulse update for June 9th, 2026. The Experian Commercial Pulse is a bi-weekly report offering a snapshot of the US economy and its impact on small businesses. If you end up liking this video, remember to hit subscribe to continue seeing Experian updates like this in your feed. The labour market held steady in May. Unemployment remained at 4.3%, the 10th straight month within the 4.3 to 4.5% range. The economy added 172,000 jobs, and the three-month average of job creation just hit its highest level since March of 2024. Wages kept climbing too, reaching $32.23 an hour on average. The inflation picture is more concerning though. April CPI came in at 3.8%, up from 3.3% in March, and the highest reading since May of 2023. Producer price inflation hit 6%, meaning cost pressures are building throughout the supply chain. Small business optimism hedged up slightly in April. The NFIB index moved from 95.8 to 95.9, signaling stabilization after recent declines. But consumers are telling a different story. The University of Michigan Sentiment Index fell to 44.8 in May, down from 49.8 in April. And that's another historic low. Businesses may be holding on, but the people spending money in their stores are feeling the strain. The Experian Small Business Index rose to 52.2 in April, up 3 points from March and 9 points above where we were a year ago. That puts us squarely in the stable range, and the direction is encouraging. Now, let's talk about the issue that should be on every lender and small business owner's radar right now: fraud. The numbers are striking. And Experian's own data makes clear that this isn't just a macro trend, it's showing up directly in commercial lending portfolios. Here's the backdrop. E-commerce now accounts for nearly 17% of all US retail sales, surpassing even the pandemic peak. And that digital expansion is creating opportunity, but it's also creating exposure. More transactions online means more personal and business data in circulation, and more of it finding its way to the dark web. In 2025, fraud and scam losses reached $38 billion and hit an estimated 36 million Americans. The fuel behind much of this fraud is dark web activity. Experian's dark web monitoring detected over 1.4 billion stolen records in the first quarter of 2026 alone. The trend line here has been persistently elevated since 2023, so this is not a spike, it's the new baseline. Public FTC data confirms the pattern. Fraud and identity theft reports have remained roughly double pre-pandemic levels since 2020, and the post-pandemic trend line is pointing up again. We're approaching the prior peak, and there's no sign of reversal. Experian's own commercial data shows the same thing internally. First-party fraud, where a borrower misrepresents their own identity or financial situation, has been climbing steadily since mid-2024. After a period of relative calm, it's on the move again. Third-party fraud, involving stolen or synthetic identities, tells an even more persistent story. The long-term upward trend here has been essentially uninterrupted. Today's rate is more than double what it was in 2019. And no product category is immune. Looking across commercial loan types in 2025, first-party fraud rates range from roughly 0.8 to 1.6%, up across the board. And business leases saw the sharpest increase, hitting 1.6%. So whether you are originating term loans, lines of credit, commercial cards, or leases, fraud risk is elevated. So what's driving the acceleration? Well, in large part, it's artificial intelligence. AI is simultaneously the biggest fraud accelerant and most powerful fraud-fighting tool available today. Here's the tension. 72% of businesses expect AI-generated fraud to be among their top operational challenges within 2 years. 63% say they feel confident in their ability to handle it. but only 37% are actively using AI-powered tools to fight fraud right now. And that gap between awareness, confidence, and actual deployment is exactly where fraudsters are exploiting the opening. Most businesses still lean heavily on passwords, PINs, and CAPTCHA. Those tools aren't gone, but they're no longer sufficient. Behavioral analytics, document verification, device intelligence, biometrics, these capabilities exist and they work. They're just not widely deployed. So, as you think about fraud risk going forward, here are 3 indicators worth monitoring. First, dark web activity. An uptick in stolen records typically precedes a wave of fraud attempts by weeks or months. Second, early payment default and straight roller behavior in your portfolio. These patterns can surface fraud pressure before losses are fully realized. Third, the AI arms race. The organizations investing now in intelligent fraud detection will have a measurable advantage over those that wait. And there's a lot more on the growing fraud problem in this week's report, so be sure to subscribe. If fraud rates are a challenge in your business, reach out to your Experian account team. And if this update was helpful, please like and subscribe. And last, remember to keep informed to stay ahead, and we'll catch you on the next one.